Hey guys, this is the 10 lessons learned from the Kata challenge for our research weekend 2023 for the OWL group. And I would say first off is that I've been thinking about how I almost could change this to principles instead of 10 lessons learned because they keep coming up. I keep learning them and going deeper with them. And I think rather than kind of just lessons and something, you get a grade on, you put to the side, they're almost more like principles really, where they're things that I keep learning about, keep practicing through actual experience with the market. The lesson one is the three basic patterns capture all the major moves. So for the Kata challenge, there's three basic patterns that are really the foundation blocks of our style of trading and the indicators we use. And if I can trade all three patterns as they come up, which is almost a lifelong process, at least so far for me in itself, being able to trade those as they come up, I'm able to capture really all the big moves in whatever symbol and time frame I'm trading. So what's nice is that when we combine these patterns, we can go long, we can go short. There's pattern for reversals, reversions to means, trend continuations, buys on dips. It's not kind of trying to predict what's going to happen, it's not, it's agnostic to direction. It just sees the price and trades it. This is a case study of this where you can, this was an early chart markup that I had when I went through the bar by bar looking for the three basic patterns, which is one of the things we do in the Kata challenge. We learn to trade one pattern at a time, and then we go through the same sessions and look for the other patterns so we can kind of learn them slowly in a safe way. This was on EWZ, the Brazil ETF, but it was always such an interesting chart to me because as much as the different things that are going on, once I integrated all three patterns, we have some collapsing dragons, some SSCs, Kata 2s. Once they were all together, I realized that it really did capture all of the major moves. And that's encouraging to know that I don't have to try to figure out what's going to happen, which leads to our next lesson. So I don't need to have a crystal ball to make consistent money. Lesson 2. So by just trading these three patterns as they come up, I don't have to worry about trying to knowing what's going to happen next. My chart reading doesn't have to predict what's going to happen next. It's just paying attention to what is right now. What's the price action doing right now, not what I want it to do. And if I can let go of that, trying to predict any future results and just trade the next pattern, that's where my attention goes. And then my trading proficiency goes up, and I'm just ready for when price does end up moving out in my favor. I can use just our simple, proper, established exit rules to capture the winning trades. Lesson 3 is by using sample sets, you don't have to worry about each individual trade. And this is something that I learned from Mark Douglas, this idea that it's really hard to find someone who won't get discouraged after 3 losses in a row. But if you're looking at, let's say you have a good positive expectancy system that's about a 50% win rate, it's totally within the normal bounds of performance to have a losing streak of 3 or, even 5 or more losses in a row. And so one way that I learned, and this I think can only be done experientially, there's the theoretical knowledge and there's, our head knowledge, and then there's the kind of like Ken calls the knowledge in our hands and stuff that really come by doing. And that's that craft knowledge that I was able to build some resilience and detachment to taking losses by just committing totally to trade in sample sets, of 20 to 25 trades. That was a really good spot for me because I wasn't sure if it was going to be good. So I was able to trade enough that if something was wrong, I didn't have to keep going. I was able to make a change. But by committing to that 20 to 25 trades, I wasn't looking at the next 2 or 3 trades. I really was not paying attention to that. I said, let me just finish the sample set. Let me just finish this. And that really helped get my head out of worrying about that next outcome. So another thing about the sample sets, I think, is that the real idea here is that we can allow the edge of our system to play itself out over a larger series of trades. By doing this, we're not obsessing on each trade. So I think part of this also let me understand just how much randomness and noise is in the markets, and that's just part of trading. I can still, though, even with all that noise and stuff, still see the edge play itself out over a series of trades. And the more sample sets I take, I kind of develop this faith of, well, maybe I'm in a drawdown right now, but I've been here before, and I know that as long as I'm following my written rules and my trading plan, that there's really nothing to worry about. Here's a case study of this where if you look at, this is a sample set of trades, and on the right side we can see the R multiple results. So what I want to draw attention to is that out of this 1, 2, 3, 4, 5, the first 5 trades I had 4 losers, and I was down 2R. So that was typically before I did the Kata challenge. That's definitely the point where I would say, okay, this thing doesn't work. On to the next thing, right? This isn't working. But because I was totally committed to the next 20, 25 trades, I just said, okay, well, let me just finish these 20 trades. I know it's not going to work, but let me just do it. And then as I went through, the edge started to play itself out. And the cumulative R for the sample set was actually quite good. It was 12R, and it had a really good expectancy, actually, the sample set of almost 0.6. So it really was an example here, this case study, of how just trusting the system, or trusting myself, really, to finish that commitment I made to a sample set is really helps me to start to think more like a trader in probabilities, not worry about each individual trade. Lesson 4 is about focus on the process, and I think this is so important when we're dealing with any kind of performance-related activity. The stress that can inevitably come from that, I think, is the way I was able to kind of shift that was really just kept going back to focusing on the process. Whenever I started to try to think about my trade results, or what the last trade did, or is this one going to be a winner or a loser, even though I have no control over it, after I'm in it, to shift my attention from that profit and loss to just focus on the process of trading well, which there's so much to focus on with trading that that's enough. If I can really do that, when I get my rules set in my trading plan that I can trust, I can put my attention then to that process of trading rather than looking at the results of each trade. And for me, this was just another way for me to not stress out about each individual trade, and then keep focusing and refocusing on trading the system the way it was designed. And I have found that when I do this correctly and consistently, when my behavior is correct, the profits just naturally seem to take care of themselves. The lesson 4 case study is just an example of kind of how this doesn't have to be something complicated. This was one of my first trading plans when I was doing the Kata challenge. My trading plan for the week was 3 days a week, a couple hours each day, very simple. And that's kind of the point here, is that I don't think a good trading plan has to be super complicated. I think it's kind of a map to follow so that we can start to get some kind of structure and professionalism into the active trading, which will take away all that compulsiveness, that FOMO, jumping at trades, over trading. And so for me, I've also found although my trading plan is always evolving, it's always changing, I've noticed in general, it's better for me if I try to keep it simple, because then I can more easily follow it. I'll usually have a point where my trading plans start to get so I call it the Dungeons and Dragon rules after a while. If this happens, I'm going to do this. Of course, unless this is happening, then this. And it gets so complicated, I say, okay, enough, just simplify it, and then I can follow it, and things are good again. So that's something I think is part of that process, is keeping it simple so that we can develop the confidence of being able to follow our trading plans easily. Lesson 5 is about coaching, which I think is really imperative. From the beginning of the Kata challenge, I had Ken Long from Tortoise Capital coaching me on his nightly strategy podcast, where he marks up the charts that traders post. He gives insights about the trades, what he thinks were done well, what can be improved. And I honestly don't think I could have done the Kata challenge without him and without this coaching. It's just so easy for me to get down on myself. Every time I had a drawdown or a couple losses in a row, even though I knew I shouldn't, this in my head, I knew academically it didn't matter. That wasn't what I was feeling. And inevitably, when I was feeling like that, I would listen to his coaching, and he'd highlight things I did well, and it really gave me the endurance and the motivation to keep going. And the other thing I want to say about coaching, at least for me, was that I didn't make any huge changes. Ken never said, oh, drop what you're doing and do something totally different. It was always just these little improvements and adjustments, little things tiny little things that over a series of small changes over time end up having this big impact. So one thing we can ask is, what would you tell yourself if you were coaching yourself and looking at your performance? I'm able to use Ken as a model for coaching myself as well, and I think it really all starts with this honest appraisal from someone that we trust, where it's able to be shared in a safe space, and that really can't be overstated. This is a case study from one of my earlier charts, and it's funny when I look back at him, I'm like, wow, he was really, really nice to me, with the way I was trading. But the link is down here, and the point is just that what he did here on the charts, even though when I look back, I say, wow, there's a lot I could have done different. He was just looking at, was I following my rules that I had stated? And then you can see on the chart, he'd put an A. And it was just kind of this go, no go. Are you following the system as you're supposed to? That's an A. We're not worrying about each individual result. And I think that's it's just a really great way to I think progress in our trading, so that we can really see what's happening without beating ourselves up about it. Lesson 6 is that one symbol is good enough, and all you have to do is look at some of the great traders in the Owl group like Luke and Constantine to see that this is absolutely true with evidence. But one of the biggest issues I had as a new trader was kind of not knowing where to start. I think when you look at all the different choices of how many different symbols we can trade, different stocks, ETFs, Forex, crypto, everything, futures, it just becomes so easily overwhelming. I think it's part of the nature of the market that entices us, is that there's kind of this unlimited degree of what you can do, of how you can express yourself. But and having a place where there's basically no rules, it takes me 5 minutes to open an account, and they'll let me trade. And there's we know there's this possibility for unlimited wealth, and that's really can be quite a charged experience. But that's also, I think, what can lead to this overwhelm, this indecision. So I remember when I started the Kata challenge, which has you trade, the night before, I decide what symbol I'm going to trade. It's already decided. That's part of the plan. It's built in. Is that I was always feeling like I wasn't on the right symbol. Like this, it's going to move sideways today. Nothing's going to happen. And there's something better out there that's moving more and moving in a more orderly way, less noisy. And why aren't I'm going to miss it? This total FOMO. And the Kata challenge specifies, it's built into it, that we just trade one symbol at a time. And I just thought this seemed so limiting when I first started. What was interesting is, as I actually traded one symbol exclusively for months, I traded EWZ, is that my FOMO kind of dissipated, because what I started to have was these firsthand experiences going against my beliefs that I was going to miss out, because I was just trading one symbol for a long time, and I was positive expectancy. My equity curve was going up. And I was getting much better results than if I tried to manage a whole bunch of stuff and just screwed everything up. So it was like the span of control was so easy. I could actually execute this system well. And I think doing that is really why we call it the Kata challenge. The Kata part is the forms. The challenge is, can I really bring this down and limit myself to one symbol and stick to that? Can I apply that kind of patience and discipline? And to me, it really is about this idea that less is more. I actually there was a certain point of time in my trading where I was recording how many trades I took each day in my daily R capture. And what I saw was there was actually an inverse correlation between how many trades I took and what my R results were for the day. I actually did better when I traded less. And I think it really has to do with that I cut down on my trading errors. And part of that was that it was just a huge burden off my back to the night before say, I know exactly what I'm going to be trading the next day. It made my span of control really manageable. And I started to feel like, okay, sure, I can do that. I'm going to trade SSC on DIA or whatever it was. I can do that, And just these small, sustainable, achievable goals was so much better than trying to bite off more than I can chew, which I think we do a lot in trading. We want to be farther than we are right away. And this is just a quick case study of how even just with one symbol, you can still get lucky and get some really nice trades. There was a volatile move up at the end of this day, trading EWZ, and I ended up making over 6R in about 2 hours. What more could you want? Lesson 7 is about how to avoid over trading. And for me, this is so important. In trading psychology, I get to know my strengths and my weaknesses. That was something Van, taught me about. And in my experience, it's best to look for really the obvious things instead of trying to look too deep. What would someone notice that was coaching you that you obviously are having an issue with? And I think the reason the Kata challenge was suggested for me was because the day of the trading that I had posted again, the coaching, it had tons of over trading. I was quickly stopping and reversing and just getting whipsawed like crazy. And that was, I think, why that Ken saw that the Kata challenge would be a good exercise for me, because I was so prone to that. I was trying to do way too much, way too soon. And I've also put in a rule that I would only trade at PSAR flips could I enter a trade. And that's something for my own self really works well with my system and the market, that I limited myself to one trade per PSAR flip, unless maybe I'd do a re-entry if it had been closed for profit. But the point was, it was another way for me to really take only what I saw as really clear signals of the patterns. And that really helped me to then honor every trade instead of just wanting more and more trades. It really helped me get in tune with what the market's doing by saying, I really want to time this trade right so that it counts. And this is the example of the chart right before starting the Kata challenge. You can see over here, I was, in, out, up, down. And it was just, this is to me what overtrading looks like for me. And the Kata challenge has rules and filters to limit my trading so I take better shots. And my performance has just increased so much since doing those kinds of things. Lesson 8 is that there's no perfect exit. So when I started the Kata challenge, I used what was just called we call the Uwe exit. It's very simple. You keep your initial stop in place where the initial PSAR flip is, and then once we have 3 PSAR flips or PSARs print above our entry, we can move our stop up and then trail it with the Bollinger Band mean. And I really I still like that way of trading, because I like just leaving the stop in there, having a wide exit. If it's already gotten to the point where it's got 3 PSARs printed above my entry, I'm sure this is working. And, the momentum of it is probably going to keep working, so why not just stay in? The wide exit keeps me out of the chop. And, the only thing, of course, with that, what's the drawback, is that then the price sometimes moves up really quick, right? I get some explosive move in my favor, but the PSAR is way too slow, and I don't get the majority of, the move. The maximum favor excursion compared to my capture, is lacking. So at one point then, after doing that, I started to use a trail stop of just the 1R. So I would just trail by that initial risk and just use that. And I like that as well. I made sure I was never going to give up more than 1R in hand, by definition. I liked how it was ruthless to capture profits. But again, there was drawbacks. If I missed the re-entry, or maybe I got in for a re-entry and then the trade reversed for a stop out, I felt like, I could have just stayed in and saved myself some R here. And then I felt like the trail stop was too close, right? Too hot, too cold, the Goldilocks thing. And so I've tried, and I continue to try many, many different exits through the Kata challenge. I think one good thing about it is that the entries are so fixed in general, with just using 3 different patterns, that it's easy to continually adapt the exit strategies, which seems to be where most of the gold is found. I think exits really, in my opinion, have a lot to do with individual psychology. I think our end objective should just be to make money, right? That's what we're here for. We want to make money. But if the exits cause me to ignore my rules and make a bunch of mistakes, then they're actually not helping that bottom line of making money, right? They're actually defeating it. So in summary, I'd say, all the different exit techniques I used worked. Were they perfect? Of course not. That's the lesson here, is that there's always, to me, some regret when I exit a trade. That's just kind of the feeling you wish you would have entered, or you wish you would have exited a little bit better, but that's just part of it. I accept that that's just now how it is. To me, it's better to really focus on the flexibility. To me, being too rigid can really be harmful when trading. It's more better to accept the noise, accept the vicissitudes and randomness, and then I'm not going to catch it perfectly. And there's no perfect exit, and I'm just happy for patient improvement. This is a case study of some different profitable exit strategies I've used. The Uwe that we talked about, trailing with the PSAR. I've trailed with the PSAR both when the price bar hits the PSAR exiting, as well as what we now use in our workshop, where we wait for the RL10 to cross the PSAR, which I think is really good because it's sure to let the profits run. We trail with just the 1R risk box, adding a no lose after your average win or after a 1 hour win, and then a 1-2-3 exit, exiting at the edge of the dragon. These are just some of the ones that I've tried during the Kata challenge. Which one is best? They all have their own strengths and weaknesses, but the point is they're all profitable. While there is no perfect exit, I do think there's lots of simple exits that are good enough to be positive expectancy, that are more robust, and you can actually execute them well. Lesson 9 is don't change your oil while driving. So we trade in sample sets when we do the Kata challenge of at least 20 trades, but 50 trades is even better, especially once we've been going for a little bit and we're getting some good numbers. But before the Kata challenge, I would change my rules after every few trades, if I even kept the same trading plan or same system. I was just system hopping, changing everything all the time. And this is probably one of the most important things about the challenge part of the Kata challenge, is that I make this full commitment to trade a certain rule set for a full sample set, that I'm not allowed to tweak the rules mid-sample. Because I would usually think after a few losses, like that earlier example, something's wrong with my system. And I ended up changing it so much. I've changed so many variables that I could never tell what's wrong with it, right? I've changed so many things. I'm not even at the same system anymore. But if I can wait till the end of the sample set, then I can practice this discipline of sticking to my plan, sticking to my trading plan and my written rules. And then when I'm done with that sample set, then I take the time to have some distance from the trade results, to analyze them more objectively, not based on just what happened the last 3 trades or what my current, R capture is. In the same way, you wouldn't want to change your oil while you're driving, that there's a time for analysis and there's a time for execution. Final lesson 10, is the massive importance of no lose plus dinner for 2. Now, that's a term that describes the earliest moment I can move my stop up to break even. Nothing bad can happen to me at that point, right? Because my risk is out. So now I just get to see how much it's going to go in my favor. My risk is out, so it's a much more relaxed state of mind. One thing I've noticed is that when I started trading real money, even just like $10 per trade, is how different it feels losing money. And especially if the trade has gone in your favor for a certain amount, that I'd get this feeling that, like, instead of losing money, I could just save myself that pain by getting my risk out. In my daily debriefing process, what I started to get a feel for was that I just seemed to know when to get the risk out. I think one of the best definitions I've heard is that it said when you were certain the trade was working in your favor, so that way we don't choke the trade and move it into the noise. But when we see that it's working in our favor, we can get our risk out. And I think, it can be really easy to follow rules and take that loss when it's not costing me anything. But when there's real money at risk, there's a huge psychological edge to being able to get my risk out as soon as, it is logically possible. So here's a histogram curve of the first 9 months that I was doing the Kata challenge. As a beginning day trader, learning to trade intraday, but getting paid for it. For someone like me who was used to consistently losing, or at best I'd have these boom and busts where I'd get it, lose it all back. This was really nothing short of a miraculous improvement for me. So much gratitude to Ken and the team at Tortoise Capital, the Owl Group, for helping me, for letting me participate. If you'd like to see more examples of the Kata challenge with trade examples, you can visit our YouTube channel. And if you're interested in learning more about our Kata challenge, you can visit ablewaytech.com for special discounts. Thanks for watching.